Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Wednesday, November the 1st, 2023. What a day. We had a handful of economic data, which kind of got looked at, kind of got ignored. And then we waited and we got the Fed, which did as expected. They took a pause. And I think that the way that the market wanted to interpret things today was that, hey, we're okay. And the Fed isn't being as hawkish, even though it depends on who you spoke to, as one would have thought, or as Jerome Powell was last meeting. Excuse me. So the market continued to rally. In fact, it picked up the speed after the press conference at 2:30 Eastern today. I really want to stick to a technical picture here because what's really going on now is purely technical in my view. And so I want to go over things a little bit more detail. So we're starting on the 4-hour chart, still got that primary B, still in the intermediate 1, intermediate 2 complete. We're inside that third wave, of which we have minor wave 1 and 2, and we're inside minor 3, but just in the beginning stages. So that continues to be the play in my view. Now, a lot of people are going to jump because I think this sometimes it's like when you want to jump and say, no, we're all way too bullish right now. One day does not make a new bull market. One day does not release all of this energy that is being directed towards a longer term view. Now, we still have upside to do. That much I'm going to give you. But I do not believe that downside is complete. And it's clear sailing from here and new highs are on the way. That just doesn't fit the picture. And so I'm going to stick with the technicals. Okay, so 4-hour chart. We have this, and this is what we're dealing with right here. So I'm going to just drop this down to the 1-hour chart and take a look at that. Okay, so we have minute wave 1. It was nice. It was a doozy. We cleaned it. We got it all nice and clean, all clean in how it's labeled. Then we're getting into the second wave, a minute second wave. And boy, has it just been massively confusing because of the threes and threes and threes and threes all over. And then suddenly a break. So when you take a stand and I take a look at this, and I'm like, okay, I'm in a minute second wave. It should consist of a minuet ABC. And all C waves must be 5. So I kind of let it play out, continue to let it play out, not divert away from the fact that it remains corrective versus impulsive, and that we're working our way higher. And as you remember yesterday, I did switch and I put, instead of minute wave 3, putting us in a minute 4th wave, which would have blown out today anyway. So what I saw yesterday was good in terms of me being able to switch and go back and say, no, this only completes minute wave 1. And again, I thank the folks that have come in and comment and kind of broaden my own view a little bit to show me a better picture, so to speak, or just a cleaner view of what is taking place. And I really do appreciate that. So again, I want to say thank you to those that do comment and bring in their own view and bring in their own educational material that is going to improve what we're doing here. I'm very appreciative and always welcome. What's never going to be welcome is the righteous comments, the ones that are just like, blah, 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 blah. But if you're legit and you've got something to say and it's worthwhile, please say it. I usually will answer on comments. So again, enough said there. I mean, we have some people that are bringing in their trading stuff. We have, they're talking about 0 DTE options and what's going on there. That's great too. You can leave your comment about what's going on and how that may or may not be upsetting you, because it gives me an opportunity to fill in some of the gaps that may help have a better understanding of what type of a market you're entering into and why it's doing what it's doing. Now, back to the NASDAQ. So we're in this minute wave 2. We have a minuet ABC. I marked out A and now have marked out B. Strange as it is, kind of a very small little failure here, but nonetheless, we got an ABC for A, then we have an ABC for B, and then we start into our C wave, a minuet C wave, which is going to have 5 waves of sub minuet degree. There's 1, 2, and then it subdivides 1, 2, 3, 4, 5, 3. I mean, it's not been easy. It's not been easy. This throws another wrench, and you're like, okay, but then they launch, and they launched on our opening, and they just kind of went. And we had one little drop off right into some numbers came out, and then we had to wait, and then we get the Fed decision and the press conference, and off we went. In fact, from that started off of a 14,550 low, and we ended up at 14,770. It was pretty strong. So, but here's the count: 1, 2, and then 1, 2, 3, 4, 5. Put a 3 on it. We should get a small 4. We still have a 5 to do, and here we are. So we are basically sitting right below most common for a wave 2. And that is a 50% retracement of wave 1, and that sits at 14,804. We're right underneath it. Likely to be hit because we got 2 more international markets. We got the Asian markets, and then we have Europe, who have to react to everything we did today and fit it into their world and do what they're doing. Now, it could work 2 ways. They could decide, that was enough. Boom, we're selling it. And because maybe they're selling their own markets. I don't know. I don't have a crystal ball. Now, but I'm looking for 4 and then a 5. So we still have strong possibilities. We're at least going to get to 14,805. And the next we have is 14,961. Now, what can this market not do? Well, it can't go up and it can't break above the start of minute wave 1. And that is at 15,468, actually. 15,468, 469. It cannot go above that. But wave 2s are possible. We do have the possibility where it could rally almost up to it. It just can't break it, and then it turns in nosedives. Now, am I expecting that? No, not really. But this is the NASDAQ, folks. And tomorrow we have Apple's earnings. Apple's earnings alone could drive it to 15,000. Look what we had today. We had AMD, which came out yesterday. They decided they didn't like it. The stock went down $5. Then by the time Globex was getting ready to open, they brought it back to unchanged. And then flirted all night long with it, a little bit higher, a little bit lower, a little bit higher, a little bit lower. But something today, and again, the CEO came out, and what did she do? She started talking about AI. And bam, AI, that's all we need to hear. Run. And the stock was up $9. Let's just see how it finished up. Where are you, AMD? 9.5. Finishes up at 9.5. Started the day at 98. Flirted with going down. Earnings came out yesterday, disappointing, went down to 93 first. So this is quite the flip. And all on a chip. And guess what it did to take with it? In comes NVIDIA. Oh, they're up 15. Why? Because they have the master chip. They've got the big one that everybody loves and everybody has to have in their gaming, right? Oh, so NVIDIA is going to blow their doors up again. It's nothing but moving from one to the other and a hope of women, a prayer, which may come true. But to me, it's like, folks, do we not want to question this rally in AMD? Why suddenly today we're mentioning something that should have come out in the press conference last night? Oops, I forgot to tell you guys. I don't know. Could be all legit. In the meantime, I keep saying I want to stick to the technicals, and then I drift off. So back to the technical picture. The technical picture still shows that we have a 4th wave small decline, followed by a 5th wave up to finish the minuet C wave, and then in turn the minute wave 2. Now, at 14,140, we were not thinking we're going to get up to 15,000, but here we are, knocking on that door. Now, what could spoil this party? Again, we're getting finally there's a lot of negative stuff coming through in different sectors. So maybe overall, I don't know, we had that pay comp, whatever they're called, yesterday, just kind of dropped from 240 to 160. So that was a pretty big dump. And it was like, oh, surprise, we're not going to do as well as you thought we were on the fourth quarter. So again, Apple, it actually caught the upwind today, caught it nicely. And then on top, we have Apple tomorrow, and we have an expiration on Friday. So again, we battle these things, folks. We battle. It's like, oh my God, the weekly expiration. Where does everybody think they want to close this stuff? And they just start pushing and posturing. And next thing you know, we're retail. Even though because I'm not sitting on a desk anywhere, I'm trading for myself. I'm retail. I'm not a market maker. I don't get deals first. I sit at home just like everybody else, and I'm trading just for me. That makes me retail. Us retail, trying to go against these big institutional firms, plus the big HFT firms, which are in there on the zero DTE options that have these multifaceted, very, very deep algorithms that are in there and operating every minute of every day and pulling out a ton of money. Great. Whether we like it or whether we don't, that's the business right now. But we can learn to play along with them. We can learn to be nice with them. Now, there were very many points today from the opening that it was like, oh, great. We did that initial shot up. We did, yep, we're going higher. And then it just kind of fluctuated around. But it's not just fluctuating in $1 or $2 in the NASDAQ. It's fluctuating in $5, $10, $15. And if you're a retail trader, if you're just a little guy, you gotta pay attention to your risk. Otherwise, you're the smaller your account and you're taking on heavy risk, you're going to lose your account. So it becomes very, very difficult to trade against a lot of what can be happening in the market. Because when they decided to come in after AMD's going in one direction, and they're already selling Tesla and some other stocks, pushing them lower. And it was just this herk and jerk type of a move until finally everybody joined the bandwagon and we all went together. Then it was able to, okay, I'm just going to buy it and then I'm going to make my money. And then those times did come in. So again, I cannot tell you what tomorrow is going to bring. I do know that pretty much after the close, we have Apple. That's everyone's waiting for. And now they're all feeling that's all in the clear now. Fed has lifted that iron curtain that would have held it down. I don't know. The Fed didn't do anything that we were not expecting and the market had already not priced in. But I'm seeing tremendous rallies in the bond market now after this press conference. Someone's hearing the right things. So what happens in the bond market when they're thinking like, okay, we're not going to go down anymore? Rates are, we still have rate hikes that are possible. And they started to loosen up that talk a little bit today, folks. So again, it's like, oh, okay, last time you were like, oh, we got one more, at least one more this year. And now probably not. So it gets a little fuzzy, but I think it's like Jerome Powell, you're talking for the benefit of the markets. You're talking for the benefit of some bigger players. I don't know. But again, trying to stick to the technical. The bond market and the treasuries are beginning to show that, nope, the lows might be in. I've discussed that previously, showed it, pulled it back, have put it back in place. And so that'll be an interesting update, which I'm not going to do today. But it looks like the bonds may have put in a bottom, and they're in their B wave counter trend rally in the bond price and counter trend decline in the rates. Over in the S&P, it also great rally, went flying right through 4240, went up, played right there for a little bit, and then just went all the way and caught a strong updraft, strong. And a lot of that came from AMD and several of the other companies, Microsoft, Meta, Google, Intel, all of them adding to this rally. Now, one thing that I will share with you, for the better part of the day, the Russell was down. Then suddenly the Russell caught fire. And that's when everything moved in unison. And those are the rallies that you want to catch. If you're watching the market, I'm just a little trade talk, sorry, because it's moving away from the technical. But if you're watching the market and you see them coming in, and you can, via the tick for the broader market, the tick ND for the NASDAQ, and the tick RL for the Russell, and you see them coming in, bang, 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 that they're buying bigger baskets on all three, joint effort, folks. It's almost like an intervention if you trade Forex. Boom. This is where we're going, and the push comes and it goes. And those are the trades you want to build on. Those are the trades you want to take, because you're going to make your money. It'll slide through, it'll not slide, it'll rip through resistance, it'll rip above moving averages, and they still come in with big size, and you just stick with your trade. All right, here in the S&P, same story, minute wave one. So none of the larger picture has changed. We still remain within this minute second wave. We're getting very close, as in the NASDAQ. We're just a tick below, not more than a tick, but just a niche below the 50%, which is the most common for a second wave. Above that, we have 618, which is the second most common, and that's at 43.13. And weren't we just wrestling with 42.13 today at one point? You know, we were down there. Here's the morning. We were down 12, 13. We wrestled around 16. We played around there, and then finally broke it. And then we got some, but then they came back and decided to give it a little retest. And then we flew. And we almost are getting back. We're almost up to 43.13. Now, I still believe that at 4,300, we should find some pretty stiff resistance there, since that was a support that got kicked out. I believe it's probably lining up now as more of a resistance area. So, but I'm not really looking for much more than that. In fact, we're getting up to the first layer, which could complete the move, and that's 42.76. You're going to give it a little window around this, 42.70. Oh, what was that high today? The high today was 64. We were getting close, folks. We were getting really close. So 42.70, 42.80, much more than that, then we're heading for here. Now, mind you, if we take a peek, we should have some price resistance at 42.90. And that's just basis of where this fourth wave topped out and died. Maybe it does it again and dies. Don't know. So that's our picture. Moving averages are now beginning to follow the leader, follow the bouncing price. The 20 is heading up, the 50 is heading up, the 100 is turned, and the 200 is getting lit. Maybe, but it will. So it's giving a little bit of extra oomph to the rally. But we know moving averages, it doesn't take much. If we turn and we start to fall, the 20 will turn, they'll all start to turn and head back lower yet again. So that's kind of finishing all that, but I will take a little bit of a look at our moving averages on the daily. On the daily, we haven't yet gotten up above the daily 20. That's going to be our first step. If we do, if we break above that, I think we will get to 43.12 pretty quickly. And then we have to break above 43.35 to get above the 200, and then the 50, which is still heading down, sits at 43.91, and the 100 sits at 44.64. So the daily is not necessarily lining up to cruise. So the hourly, yeah, should make it. But the daily, no. At best, we may break above the 20, but I'm not really looking for that to break the 200 or the 50. So this is more an agreement as to what we're actually doing. A minute wave two, a correction, and then we're followed by a stronger decline. All right, so that's where I'm going to leave it. And our next update will be on Thursday, November the 2nd.